Today, we're going to break down the 2025 annual report for Global Estate Resorts, or GRE as most people call it. Our mission here is simple: to slice through all the jargon and give you, the potential investor, a really clear picture of how they're doing financially. So if you've been eyeing the real estate scene in the Philippines, GRI is probably a name that's popped up. By digging into their latest numbers, we're going to see what's really going on behind the scenes. Let's get right into it. Okay, first things first, before we start crunching any numbers, let's get a handle on the basics. Who exactly is GERI, and what is it that they do? You got to understand the business before you can understand the books. GERI's big thing is creating these massive all-in-one communities. We're talking places that mix tourism, homes, and fun all in one spot. And a really key detail, they're a subsidiary of Mega Worlds Corporation. That's a huge deal. It means they've got some serious backing and a big leg up on the competition.
All right, let's get to the question that's on every investor's mind. It's the most fundamental question there is. Is the company actually making any money? So the big one, was 2025 a profitable year for GRI? Well, luckily for us, the annual report gives us a pretty straightforward answer. And there it is, a consolidated net income of 2.26 billion pesos for 2025. Now, that's a big, impressive number, but a number by itself is just a snapshot in time. To really get what it means, we need some context. We need to see the trend. And here's that trend. You can see their net income actually grew by 5% compared to 2024. According to their report, this wasn't just because they made more sales, but also because they got better at managing their costs. So it's not just about being profitable, it's about becoming more profitable. That's a great sign. So where is all this cash coming from? Well, this chart lays it all out. The lion's share, a whopping 5.76 billion pesos, comes from real estate sales. No surprise there, that's their bread and butter. But look at the other slices. They're also pulling in good money from their hotels and rental properties, which shows they have a few different ways to make money, even if it's all centered around property. Making a profit is great, but it's really only half the story. A company also needs to be financially stable to be a good long-term bet. So the next question is, can GERI handle its bills and its debts? Let's do a little financial health check. First up, we're looking at something called the current ratio. It sounds technical, but the idea is simple. It basically asks, if a company had to pay all its bills for the next year right now, could it? A higher number here is definitely better. It's like having a bigger emergency fund. And look at this. GERI's current ratio didn't just stay steady, it improved. It went from 4.47 to almost 5. This means that for every single peso they owe in the short term, they have nearly 5 pesos in assets to back it up. That's a very, very comfortable cushion and a fantastic sign of stability. Okay, now let's zoom out and look at the long-term picture with the debt-to-equity ratio. This one tells us how much the company is relying on borrowed money versus the money invested by its owners and shareholders. As an investor, you usually want to see a lower number here because it generally means less risk. And here again, we see another positive trend. GERI's debt-to-equity ratio went down. That's a good thing. It means they're leaning less on debt to finance their operations, which makes their balance sheet stronger and reduces their long-term risk. Another checkmark in the positive column for investors. So, we've seen that GERI is making good money and is financially solid. But what does all that mean for you, the person who might actually buy their stock? Let's check out how the stock itself has been doing and what kind of value it's providing. Now, here's where the story gets a little more complex. When you look at the stock price, you can see that the highs and lows in 2025 were actually lower than they were in 2024. This kind of suggests that even though the company itself was performing well, the overall market mood might have been pulling the stock price down a bit. But don't just look at the stock price. There's another metric that connects the company's profit directly to you, the shareholder. It's called earnings per share, or EPS. And in 2025, GERI's EPS was 0.175 pesos. So what is EPS? Well, the report itself says it shows the earnings for each share you hold. And here's the crucial part. GERI's EPS actually grew from 0.162 pesos the year before. This is such an important insight. It means that while the stock price was struggling a bit, the fundamental value delivered to every single shareholder actually went up. Of course, a smart investment analysis isn't all sunshine and rainbows. You have to understand the risks too. So what kind of challenges does GERI see coming down the pipeline? The report is pretty clear about the potential headwinds. You have the usual suspects for any real estate company, right? Market risk, competition. But for a company that's all about tourism estates, things like political shifts and especially climate change, we're talking typhoons, flooding, are a really big deal. Then you throw in the risk of rising interest rates, and you've got a whole list of things an investor really needs to think about. So, what's the final takeaway? Well, GERI makes a pretty strong case. You've got growing profits, a healthier balance sheet, and more value being created for shareholders. But at the same time, they're navigating a pretty tricky environment with some serious risks. So the ultimate question, the one you have to answer for yourself, is this. Is that solid foundation strong enough to handle whatever storms come its way and keep on growing?